So there's a possible war happening, or there is a war happening, and the quicker this ends, the quicker we're going to survive financially as an economy. Because in the US, there are some pretty powerful things at play, and we're going to talk a little bit about how the actual war will possibly get you a raise, income higher, but also cost you thousands of dollars. And we're going to dive into some of the statistics on how that's affecting your insurance. It sounds kind of crazy. Like, what do you mean? How can that be possible if we have a war? Like, okay, great. We understand the Industrial Revolution happened, and when wars happen, the metals go up and there's more manufacturing jobs, there's more of that. But that's not what I'm talking about. Let's look back about a year to 2 years ago when the whole pandemic happened, right? We all went into hibernation, so to speak, and the jobs disappeared. People stopped working because we didn't have to. There wasn't any reason to, especially because the government paid us to stay home in some aspects when the service jobs went away. That's the thing that's going to happen again. So because of that, not necessarily saying the government's going to step in, but think about this. When that happened, the government paid out higher unemployment, we had higher paying jobs, people realized more so than that, and the reason that all the jobs aren't going back to normal, and they slowly are, but people found out that they could get a better job working on the internet. You could do this video here, or you could specialize in making quilts, or you could do something specific and have a higher pay than $12 to $15 an hour working at a fast food joint. Similar thing could happen. So if a war breaks out, the biggest thing that we think about in the freak out that we all have is oil and gas. What's going to happen? The gas prices and the oil prices. The US alone gets 6,000 barrels, we're talking the big things, of oil daily from Russia. And if that's impacted from them going to war, not necessarily them cutting us off, what they could be a thing too, we're already seeing the gas prices start to creep up and up and up. It was $2 to $3, now we might even see $5 and $6 per gallon. And that is going to create a domino effect of two things that are going to be major. One, we're going to stop driving. It's going to be a lot less for those of us that go to work. That's great. Those that don't, we won't. And jobs are going to be forced to allow us to work from home again. Now, keep in mind, this is my personal opinion. This is what I foresee as going to happen in the future. And if this continues, that will be the major piece, is that not just that, the prices of gas and oil, but then the cost of cars, because the metals and a lot of the materials, we share resources. We're countries sharing with and buying from and to each other. And if we're cutting each other off, we're going to have a huge problem. The metals are going to go to different weapons, different materials, and the cars are going to be more scarce. But we're not necessarily going to buy newer cars because we're seeing the used car market start to jump up. Guess that's doing with your insurance. The cost to repair a car is way more expensive today. Not only that, but there's a lot more factors into that specific piece, because I'm going to be releasing a video soon that talks about the increase. We're actually seeing about a 5% increase across the board for car insurance. A lot of that has to do with the cost of the car, but not so much that. It's more so the number of claims that are happening. It was about 77% was the claim ratio back before the pandemic, and we're over 86% today. Because of that, you're going to see a lot of craziness happen. There's going to be a lot of shopping, a lot of movement happening, because some companies won't go up. That's the cool part, is some have a good risk factor to where it won't impact them as much, and so they don't have to raise the rate. One of the reasons you need to subscribe to the channel, but if you are in that scenario where it did go up, the easy route is there is a link below to Cover Insurance. That's the company that we use as a sponsor. They shop over 30 plus companies. I think it might be worth it to check them out, at least to get an idea of what the rates are. If you're interested or even planning for the future, it would be good to at least have the quote started. And if you needed to update it in a month or 2 months or 6 months or whatever the case is, at least you have those options there and you can decide if it's a good fit. If not, they might get you a better deal. I've already done a couple videos that reviewed them, and they saved me several $100s on the quotes that I did. So the craziness is part with the insurance, but it's everything. The cost of foods is going to go up because that's a big piece, but there's a higher chance for you getting a raise, mainly because with that happening, the industries that are going to survive and want to survive, some of them can afford to survive for 5+ years. And those companies are going to pay the higher premium, the bigger dollar to you and me, the people that they need to run their business. If you know that you can't afford 2 employees, you might as well pay a good amount for at least one of them and have them do the work that keep your business running. The crappy part is the title of the video says you're going to lose thousands. Yes, that's going to happen. And the impact that I see with businesses is your little guys, they've been struggling. You guys, I feel you. I started a business this year. It's crazy. You guys are going to get choked out. It's just what's happening. You just went through the pandemic. You barely made it through. The government gave you however much thousands to keep employees. If the war starts and people are sent away, or we need more resources and the insurance goes up and the cost of oil and restaurants that are already hurting and dying off, that happens and now the employees are staying home again, you're not going to make it in most cases. Some of you will, some of you won't, but it's one of those things that it's going to hurt the industry, and it's going to hurt my industry as far as insurance goes, because there's going to be less businesses to insure. Right now, it's crazy how much business insurance companies want. They want your business as a business. That's one of the biggest factors when we got licensed with different companies, is they all want you to have commercial licenses. So in turn, some people are going to get higher paying jobs, partially because of skill, but mainly because of need. They need people, they're going to get paid more, but in turn, that's also going to raise the cost of the business. Me as a consumer, if I go to get a good meal, it cost me 10 to 20% more for that exact same meal that a year ago cost less. I'm going to go out less. You're going to pay your guy more. It's kind of a lose-lose for a lot of those businesses as far as the service and food industry. And now it's not necessarily a pandemic-based thing. So if you were hired in as a cleaner or hired in as something that had to do with vaccines and masks and all that, that's still going to be a small piece, but you're seeing some of those jobs start to die off. I recently in our area saw a $20 an hour job for burgers. You were making it was a burger joint. It was a actual burger place, fast food. And they were busy enough I could tell they could afford it. But I was like, I almost make as much as that guy, barely. Sometimes, depends on the day because it's commission, right? And so looking at that versus this, and yes, is this temporary? I think so. I think it's going to change. It's going to flip. And in 5 years or 3 years or whenever all this stuff is cleared off, even though we're going to have a lot of political things in the background that are happening that is going to capitalize on this, even though all of that, the $20 just isn't going to be worth it. It's only going to be worth what a $13 to $15 an hour job would have been. But on top of that, the need won't be there eventually. So when you decide if you're going to go a specific route, whether you're looking for employment, just keep in mind, is that pay and that position going to be needed when all of this clears up? If you're going into the insurance industry and you're an agent watching this channel for those reasons, I'd say you're in a pretty good spot. You're going to struggle if most of your business is businesses, because there's going to be a lot of us trying to sell business versus a lot of businesses needing the insurance. It's very similar to the housing market, where a lot of people joined in because it was easy money, and the ones that didn't really pick up the skill, or they're new and they haven't been through an economy crash or haven't been through any of this type of roughy road, haven't been through a rocky road, and they're gonna start to fall off. You're gonna see people just coming out of the industries. I've got friends that are mortgage brokers, and it's just hard to get a loan, and they need agents. Well, there's not enough houses. So there's these shortages that are almost choking off businesses and financial people. Same thing is going to happen if we continue on the path that we're going. Curious to know what your thoughts are. Do you think that I'm completely crazy? And just let me know below. Or are you kind of seeing what I'm seeing? There's almost a snowball effect, whether we are In a restaurant, whether we're selling insurance, whether we're the CEO of a company, it depends on what industry is going to be impacted. Clearly, some companies are going to grow really drastically. Some companies aren't. But then if that happens and this ends quickly, now what? What's going to shift and what's going to happen? Do we put our resources into building and manufacturing things that could sustain more of the industrial market for a war type of situation? Or if this is a quick, once maybe a year long and done or fixed or whatever the case is, then did we put too much resources and now these people are being laid off? This is getting affected. Either way, the insurance prices are likely going to rise, partially because of the scenario of the economy, but partially because the actual claims happening are a lot more different than you think. If you want to learn more about that, go ahead and click the video that I'm going to be uploading next, where we are going to talk about why we're seeing a major rate increase and the real reasons based on facts and data that are going to explain why the industry of insurance is going up. I'm Mark with Think Insurance. I'll see you in the next one.